More bank failures? That's not possible. Impossible. No, 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 no. The government told me that it's over. The government told me that they contained the bank failures with Silicon Valley and that there are no more bank failures. That's impossible. But as you guys know, my viewers, my clients, you guys are critical thinkers. You know, the truth is that this probably is not over and that this probably will continue for a while. I apologize for not getting to do an update sooner on this. I was out of town for a short while, but I am back, and the memes on the bank failures are hilarious. You got to laugh a little bit when all this chaos is unfolding. So basically, here's the deal, you guys. Uh, these banks all are holding a lot of fixed income, things like bonds and CDs and treasuries and so on, and they buy them at long-term rates, 5, 10, 20-year rates. Well, when interest rates spike so quickly in such a short time, and then depositors say, well, you're only offering me like a fraction of a percent on savings, I'm just going to take this out and go buy a US treasury at 4 or 5%. They have to start selling all of those long-term CDs, bonds, and whatnot that they had at a loss, and that is what's causing so many banks to go underwater. In fact, Wall Street Journal, hang on, Wall Street Journal, 180 banks. Let's see if it comes up. Uh, their Wall Street Journal here. Okay, so that's a blog of some type. Wall Street Journal actually did put out an article not too long ago saying that here we go, they see another 186 banks have the same exact problem as Silicon Valley. Um, Time will tell. And honestly, I think right here, PacWest is the next to go. It's kind of strange watching how this goes. How, as you know, first it was Silicon Valley, and then all attention turned to First Republic, and then boom, First Republic went out, and now all attention is turning to PacWest, and boom. Honestly, you guys, I don't think that this is going to be There's a little. It's a 50-50. Part of me says no, this isn't going to be the great collapse of the entire financial global, sector, but partially it is. The other part of me is saying that this is actually just a controlled demolition. This whole thing is a controlled demolition, and I lost the tweet, but there was a tweet that was very clearly outlining what happened when First Republic Bank went under. First Republic Bank went under on a Friday, and it was all done by Monday morning. If you remember, J.P. Morgan bought them. There was so much illegal things and um, I guess illegal things happening over that weekend between J.P. Morgan, the U.S. government, and then specifically the Treasury, and then also First Republic. These are things that have been outlined for decades, saying, "Hey, banks can't do this, Treasury can't do this," but they just put all the rules aside and said, "Here, take this bank and do whatever you want to." And essentially, J.P. Morgan bought all of the good assets at First Republic for pennies on the dollar, and they just discharged all of the bad debt to the U.S. government. So you and I got to pay for all that bad debt to make people good, and J.P. Morgan added hundreds of millions of dollars of income producing assets to their balance sheet, and I would not be surprised if honestly this is just a controlled demolition by the groups like J.P. Morgan, Bank of America, the too big to fail banks. The other half of me though is saying that, well, yes, this is unavoidable. This is completely legitimate and unavoidable. That if this many banks have the same upside down balance sheets, that it's only a matter of time. The only thing that's really going to save these guys is if they cut rates down to, back down to zero. And if they do that, okay, fine, we're going to have an entirely different set of problems to deal with. So here's a quick little update. As PacWest was dropping, Western Alliance Bank and Metropolitan Bank, those are probably going to be the banks to go under afterward. But as Kobayashi says, he says this crisis could have been contained in a matter of days. However, regulators' responses have been scattered and inconsistent. Now there are many regional banks under pressure, potentially hundreds. Now check this out. This was probably the best response to this whole drama. Whoever it is behind Zero Hedge tweeted, "This is an unprecedented Oh my gosh, this is an unprecedented humiliation for the Federal Reserve." Just 2 hours earlier, Jerome Powell said the U.S. banking system is sound and resilient, seemingly unaware that yet another of the largest California banks was teetering on the edge. How is this level of incompetence possible? So, as if you remember, there was that big Federal Reserve speech he gives once a month, and he had said everything's good. we contained the banking problem. Everybody go back and go swim in the ocean. We caught the shark. Remember from Jaws? We got the shark. Everything's safe. No, no, no. Literally that same day, and 2 hours later, boom, PacWest is down. What was it? 60%. They were down 60%, and then other banks following. So put this into perspective. Back in 2008, you had 150, I don't know, 200, 3, 100, that's 200, that's 300, about 300 banks that failed. Right here, you can see the big spike on the left side. The red is the number of banks, and the green is the total dollars value. Then you can see on the right side, the far right, only 3 banks they've counted. Technically 4, okay, because this chart just for the dates to add First Republic. 4 banks have failed, and it's already about 30-40% more as far as dollar value goes, as far as amount of money lost in this thing. And this chart doesn't even include Credit Suisse that went under, one of the top 10 largest banks in the world. So again, if they actually included that, that would be much higher. This problem is not a small deal. People are trying to just wave it off like, oh, it's not a big deal. We can, and again, let's just pretend this is not a big deal. Go back to this: 186 banks at the risk of failure, similar to Silicon Valley Bank. That was Wall Street Journal that originally put that out. And then, in a massive, massive, thick layer of irony, U.S. bankers are now begging the SEC to stop short sales against the banking industry to reduce abusive trading. You guys, the short selling industry in the banking world has been the number one most abusive thing in the stock market for at least my entire career. And they loved it. They absolutely loved it. Um, they loved it so much because when you short, a lot of people don't realize this. If you short a company and you successfully put the company out of business, like which has happened plenty of times in the past, you don't actually have to pay that money back. Don't ask why. It's a long explanation, but you don't have to pay back all of the money you borrowed to short that company. And in fact, in a rare glimpse of honesty, and this is a terrible recording, but on CNBC, they actually told the truth here. Listen to this. Listen to this.
Shorts who argue, hey, we're not the ones who got into huge duration mismatch.
Yeah.
Right?
No, but I mean, it's a perfect situation. These things go into receivership, they're a zero. I don't think you ever have to actually return your borrow. So it's a beautiful situation. And I mean, there were plenty of people who made a lot of money shorting SVB, for example, and only putting up, 5% shorting a bunch of shares. And you never even have to return them.
And First Republic as well.
Short.
Okay, so did you hear that? The guys accidentally let the truth slip. They accidentally pulled the curtain up behind and let you peek what's going on. If you think that Silicon Valley Bank is going to go bankrupt next week, I would go to the bank, to my broker, whether it's Fidelity or whoever, and say, hey, here, he said in that case, 5% down. So, hey, bank, I want to borrow $100 to short Silicon Valley Bank. Here's my down payment of $5, 5% down. They then give you $100. You short Silicon Valley Bank. If it does go out of business, you don't have to pay back the money you put down, and boom, it just rains money all over you and your 17th house in the Hamptons. Uh, so yes, go figure. This has been something that's been done for decades against many good businesses and good companies, and now the banks are panicking about this whole thing. So, and honestly, rightfully so. I don't know what's going to come of this. I don't know what's going to happen, but I don't think it's over. I've actually got positions on PacWest right now. Um, they're medium term. They're about another 2 months out. I think it seems about, from what I can tell, with the 5 banks that have gone under, it seems like every 4 weeks you see another bank, maybe 1 or 2 banks going under. So I suspect here in about I think that in about 2 to 3 weeks you're going to see PacWest jump back into the news with some very bad news. So anyway, you guys, the banking drama, it's not over. It's going to continue, and I can't wait to see how this thing plays out. So until next time, you guys take care. Reach out to me. Thanks for watching. See ya.